Futures point to a slightly higher open following the Fed's statement that it will keep interest rates low until 2014 to aid the economic recovery. On the corporate calendar, notable names reporting today are AT&T, Caterpillar, Nokia, Motorola, Starbucks, and Juniper. Economic data on tap includes jobless claims, durable goods, new home sales, and leading indicators. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Good morning, everyone. It's Thursday, it's earnings season, and we've got a packed economic data calendar. But Scott, before we get into that, let's take a look at the SPX. We're ready to hit some fresh highs here.
Yes, this trend started to accelerate, and it's been hard to hold and hard to follow, but the trend is your friend, and that statement has come through the years because it's true. So we've been looking at two trends this week, Jill. I've been here with Alex talking about the gradual trend and then this accelerated trend that as long as it's intact, you have to stay with it. And if you look right here at this chart of the SPX, you'll see it. It's so apparent that here's your gradual trend. This was at October 4th low, your November low, your December low, and note all three higher lows, which is technically really good. Then you had your descending trend line broken to the upside. I talked about the December 20th gap and go. Well, here it is. Then it broke this downtrend. You know what that is, right? Series of lower highs. Here's a high, lower high. Not this time. And then since then, you've had an accelerated uptrend moving up nice and methodically. The last few days, we've been watching this floor around 1305, around 130.60 in the spiders. And look at this day, that we took off yesterday, fine with some volume. And now the next level I'm watching is right around here, and this is from last summer, and that's about 1331 to about 1340. And that'll be an area that if you want to take some profits, that's fine, but just don't get short on the brain because we're going into another resistance.
Right, and speaking of not fighting the trend, not fighting the tape, and not fighting the Fed, we're going to take a look at the materials sector for the sector spotlight. What's interesting here, if you take a look at the ETF, the XLB, we saw a lot of put selling, really cheap implied volatility selling, which is interesting because that indicates that there might be a floor within the space.
Yeah, well, this is one of those groups that was so battered and bruised last year that in December we talked about it as a January effect play where maybe the tax loss selling is done, the economy gets a little bit better, and we'll see if the patterns can start to ignite. So I wasn't concentrating on the first company that came out with earnings, which was AKS,
right.
But they weren't that great. But look what happened here to that stock. AKS came out with earnings, and it didn't go down. Right here was the day it came out with earnings. It opened lower, went green, and then yesterday the shorts got scared, and it exploded. So for me, my target was U.S. Steel.
Right. Before we get into U.S. Steel, let's look at STLD Steel Dynamics. What's interesting with this whole space here, with the Fed keeping interest rates low until 2014 in an effort to aid the economy, this material space, look, again, it's catching the bid, and STLD is another one with some nice price improvement.
Yeah, and unfortunately, I didn't focus on this, and I usually love to focus on relative strength because this one, looking at the chart, is not a bottom feeder. It's almost near high, so this has been acting better for investors. But when they came out with their news, it helped what my focus was, which was U.S. Steel, but you can't focus on everything. Take a look at this chart. Looks really good. Technically, it seems like it's been trading pretty perfectly as well. Here you go. This was that low back in October. Then this is when it cleared resistance. This would have been a core long, but that was then. This is now. That was around 14. Then you had a nice methodical move to the upside, and then here you go. This is your extension. I would think it needs to pause into this 17 area, but this is above the moving averages. This one is actually leading this group.
So, and I think U.S. Steel as well, they also broke an important level at 29.
Yes, but a different pattern.
Right.
So you talk about different patterns. You talk about being an active investor or trader. This goes right in there because, again, I'm not a materials trader, but it doesn't matter. I trade patterns and I go where the action is. And if you look at X is building a nice tight pattern. It was doing it this entire time over the last few months. Then finally, I was incubating my trade in here with the tier 1. Then when it breaks out, you get into your tier 2. And that's what we did above 29.12 yesterday. Maybe you sell some into the close, but then I think you could trail it, and we see about 33.60 with UX Steel. And then who knows, if it really catches some fire, the next big resistance isn't up to 40, but we'll cross that bridge when we get there.
Rounding it out with two Chinese material names, MCP. Now, I don't know if this is a case of actual fundamentals where it's improving, or if this, the short interest on this is just insanely high. I think it's like at 49% or...
Yeah, it does a big short interest. And these rare earth metals, they were in vogue about 2 years ago. They've been battered and bruised. Just again, shows you how you could time the market. This one yesterday was a target of ours. 2 weeks ago, it was in our Trash for Treasures series where stock that's got come off a lot, coming off the lows, very high short interest. And if you look here at MCP, look what it did yesterday. Here's your downtrend. Here's your high, lower high, finally off the low, consolidating, broke through this downtrend with some volume. Let me just give you some quick volume here because I want to show you how, how it plays a role here. Look at the volume in MCP yesterday. That is big. It broke the downtrend. I do think this can go higher. 35 to 40 should be the next step. I will try and be a buyer of dips and stay with this. Another little guy also, there's RE. Look at this powerful move it had, about a month ago, showing you power into resistance. It held up well. Yesterday it woke up. I think this one's in the game also to take out that 7 area and perhaps get to about 844. So it's just if you want to trade it as a group, those are the two that I'll be watching.
Okay, so we'll continue to see if this commodity space really holds this momentum. Cat just reported things up, I think, $3 in the pre-market last time we looked. So, this looks like it's a fundamental and technical story here. We're going to jump into a quick commercial, and when we get back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We dive into the trenches with the banks. We're going to take a look at some of the big boys and also the regional names. Look, Jamie Dimon is at Davos this morning. He's not too concerned about Greece affecting the U.S. banks, and he sees improvement with the European situation. On the regional side, we have that loan growth, and we have improving credit quality. So let's kick it off and take a look at Goldman Sachs.
Yeah, Goldman Sachs has been a nice trader ever since the earnings report. It actually helped ignite this sector after a little move off the lows. And then yesterday was interesting to me because it got downgraded. It got downgraded, and I came in yesterday and I was like, you know what? Goldman Sachs has a nice setup. I wonder how it's going to handle support. It handled it very well, and now it seems like it might take out resistance. So if you look here at the chart, you will see, this was, I think, the day that it came out with earnings, and it blasted through this small downtrend that was around 101, had a nice move to 110, and ever since then it's been consolidating. This chart doesn't show me a downgrade yesterday. It held higher. It held the moving average. So now I would say above 109, 110. There's no reason why on a short-term basis this can't see the moving average and can't see resistance up to about 115 to 116 and a half.
Moving along to JP Morgan, my favorite name within the big bank space. It's a great management story. I think it's, even though they've underperformed the market the past 5 years, I still think this is the best out of the bunch.
Yeah, well, this one also, you go to it, everyone loves Jamie Dimon. He's a straight shooter, and there's a nice pattern here, too. It looks like it's going to take out the old resistance. So if you look here at JP Morgan, it's been in the game, and this was one thing that I focused on in the beginning of the year. I was long JP Morgan, probably into the day of their earnings, and I got out. I haven't been in there since, but I'm going to look at it here, because look where it's coming into. It's coming into a major, major level. So above this 38, you could see a move to 40, but remember, when momentum kicks in, you don't want to see it fail. So if it trades through 38, and then comes back below, that's a topping tail, which we don't want to see. We want to see it trade through it and hold it. So if you're in the banks, they've had a long move, but you just want to make sure that the momentum stays there.
Moving along to Bank of America, this stock over the past 5 years has returned negative 84%, but year to date it's up 30%.
So again, shows you how you have to be a market timer. You have to use stops, get out of things when the trend changes. But this year, so far, the trend has been up. I've been in and out of this thing a few times. I'm long it right now. I like what Moynihan had to say yesterday. He also was interviewed at Davos. He's been presenting himself very well, very transparent lately. And I look at this level at 743 on Bank of America, that if it could get above this, stay above this, you're going to see, probably a move to, I think in January, you could see 8 to 832. Well, you know what? It could happen sooner than I thought. I thought it would take a year, and unfortunately, or fortunately enough, it could take a quarter.
Let's round it out with a regional name, STI SunTrust. Look, this was downgraded this morning at Deutsche Bank, but like we saw with Goldman yesterday, that continued to hold. I like the regionals better than the bigger names. You've got that loan growth and the improving credit quality.
Yeah, I typically don't trade the regionals just because it's not in my wheelhouse, but they were acting better than a lot of the commercial banks. And if you look here at this chart, it looks good. It doesn't look like anyone was really expecting it here. You had a nice trade when it broke this downtrend right there around 1850, consolidating, trying to inch up. So I would say, look at these levels of support here. I'm not sure what it's down right now, but look at this area first around 2070. And then if it doesn't, hold there, I'd say this is your line in the sand, that this stock should hold this 2003 area, if it's going to blow off this downgrade.
All right, so we'll continue to see that if the financials can really continue on this momentum and see if we can get that true support back into the market. Let's move to quick hits for some quick cash. We're going to start it off with Wynn. You've done fantastic trading these casino names, Scott.
Well, I come back to these names when the patterns present themselves, and the first one is LVS.
Right.
Yes.
Wynn.
Oh, Wynn. All right, two different patterns, two different situations. I remember I'm saying Wynn first because Wynn used to be first. Lately it's been LVS, but Wynn has a really nice pattern here. If you look here at Wynn, you will see this is that descending channel, coming in, series of lower highs, high, lower high, lower high, then finally got nice and tight. Here's the volume the day that they talked about the shareholder problem, and meanwhile it absorbed it. So this is when I started getting bullish on it, when it broke 112. I'm still involved in Wynn. I think above 121 and change. There's an easy window, or I hate to say the word easy because compliance doesn't like that, but I think next resistance here is around 130. I think you could stay along this and trail it up until this area, 130 to 134.
Moving along to Schlumberger, ticker SLB, that hit an important level. Some analysts have taken back their profit expectations as there's been some higher costs in terms of resource reallocation. All
right, well, this chart looks very similar to CAT from a month or so ago. And I know that Stephanie Link loves SLB. I've been trading it also. It's been acting very well. You look at the chart here, it's a nice channel. Okay, look how long it's been in this for. This is a multi-month channel, holding higher above this 77. Nothing in its way until about 85 to perhaps 90. It already came out with earnings. You don't have to worry about that. It's starting to get up above the moving averages. If it could blast through this 77 and this moving average with some volume, this thing has higher prices, and I love the OIHs.
I think it's really interesting that you said, and we were speaking about this earlier in the Morning Call Express, that not only do you have to be a day trader, you have to be an investor. You have to be more resilient and more flexible with your trading plan. I think it's really interesting when you see someone like Stephanie, who's a long-term stock holder, and then someone who's more a momentum trader come together. It's just really interesting to see how the technical and fundamental analysis comes into play. Moving along.
On that topic.
Right.
The worlds are combining. You can't just be an investor. You can't just close your eyes and say, I'm just going to be in this thing for the long term, because trends change. Same way you just can't be a day trader or holding for a few days, because if you find a nice trend, you got to ride it. So I think the 1 to 3 month approach is the perfect time frame for right now. And right now, if it changes, we know it same way since December 20th. You've had this 4 to 5 week big up move, or you've also had since October 4th that reversal low. It's really been 6-7 months. Right. So, until the trends change, you ride them, you just tear in and tear out. Speaking of trends, I'm going to throw another wrench in there. We have to take a look at Apple. I realize it's not in the quick hits, but we talk about this every day, and there was some really choppy, unconstructive action yesterday following the print. Well, that's what usually happens on a big gap up. I said yesterday I was long options. I was long the 425s. I'm like, I'm going to sell half in the first 5-10 minutes, and then if they come after it off the bat, I'm just going to get rid of it. I'm like, as far as a trader, they love to sell these off in the beginning, and guys on my floor had they made more money by shorting the open than trying to buy Apple. Trying to buy Apple yesterday, even though they had an unbelievable report, even though it can go a lot higher this year, it wasn't the right day for it. So if you look right now at Apple, you will see huge gap up, and these type of gap ups take a long time to absorb, but at least you have a new point of reference. So the low yesterday on Apple was around 443.73. So I would say it's probably going to take a few days, to absorb what was a big move. And then as it absorbs it, you could buy a little bit versus, or wait to see what level winds up holding as a pivot. And then when it takes out the high of yesterday at some particular point, that's when momentum traders will start to get back involved. But right now, it needs to go sideways and absorb this huge move we've seen, since those October lows. Getting back on track with Lulu, this is another one where it's looking at some new highs. Yeah, Lulu, I'm long now. I think that it makes new highs. The momentum's there. You take a look at this pattern, it doesn't get much better than this. Started to break above yesterday. You have some resistance right here, but there's no reason why, if you look at the long-term chart here, that this won't be at 52-week highs, and this is one of the best retail names out there ever since this nice gap and go. And wrapping it up with GLD, gold's had an enormous run this week. Yeah, well, gold, it was an interesting trade the entire way. Like, it was a short the last 3 months of the year, and then going into the end of December, I think some people just had to get washed out. And on Street Signs with Brian Sullivan, I'm like, you know what? I think you cover your shorts here. I think it capitulated. I think silver capitulated. He's like, should you go long yet? I'm like, I'm not sure. So you don't have to be always right on both sides of the trade. We'll let gold prove itself. Well, finally, yesterday, gold proved to break that downtrend with volume. You look at GLD here, you will see that finally, from the high that was in August, you had a high, lower high, lower high, and obviously you could see here that this downtrend has controlled it. It just broke through. It was a viable pivot above this. A lot of my guys, including Sperling, were all over it. Here you see the volume. So this should continue. The next real resistance could be around 170. Obviously, sometimes it has to go sideways. I would say as long as these GLDs, hold at least the top third of this range, the momentum in this situation is going to be strong and back to the upside, with then the secondary resistance around 175.
All right, so the key theme we're looking at today and probably through the rest of earnings season is managing your position, staying nimble, sticking to your trading plan.
And not fighting the trend. Don't have short on the brain. Don't think we can't go higher because we are this high. Watch the composure, and when the composure changes, we'll be one of the first ones to realize it. And if you are a subscriber of T3 Live or of The Street, or if you're watching this program, we'll help uncover that for you.
And don't forget, every day, at the end of the day, catch Scott as he wraps up the charts for us on Options Profits and T3Live.com.
Have a great day trading.